perhaps sweeten the deal for investors who are already looking for safe spots to park their money? Well, joining us is CNBC contributor Alison Deans. She's also senior advisor at Varick Asset Management. Alison, which big blue chips do you think could actually benefit from hiking their dividend?
I think companies that are in industries that are going to be slower growth, so consumer staples, some aspects of healthcare. Look at a company like J&J. They've been increasing the dividend around 9% a year, but right now they have much higher free cash flow. It's about 3 times what the dividend is. So I think they could boost their dividend a lot more since their growth prospects are not quite as strong. But the whole consumer staples area and consumer discretionary, I think, is an area that's due for very slow growth. And a lot of the stronger names there have pretty high free cash flow yields and relatively conservative dividend yields. A McDonald's, a Staples, names like that. UPS, while somewhat cyclical, has been buying in stock. I think shareholders would prefer seeing a little bit more on the dividend side.
It certainly feels, though, at the moment, though, that high dividend or dividend stocks are a little out of favor. I mean, obviously, they outperformed in 2011, but so far this year, I was looking at the stats that say the stocks that pay no dividend at all averaged a gain of about 8.3%. The dividend players really underperformed.
Well, I think it's a combination of, you mentioned financials have been some of the best stocks. It looks as if people are just doing one of those rotations into industries that are depressed. If the economy is going to be better, interest rates stay low, what could be the next area for a big boost? But my sense is longer term, the companies that have a strong balance sheet, very high free cash flow yield, and give more back to the shareholders are very healthy companies that are giving people very attractive total returns in a market and global economic growth environment that's going to be somewhat slow.
Herb, what is your take on dividend? What do you think here?
Well,
are they ever a bad thing?
No, they're not a bad thing if they're paid, if the company's strong enough to pay them.
Does it tell you that the company doesn't have a better use of capital?
It depends on the company. That's
or
a broad
is it a big
statement.
red light saying, we don't think we can get enough growth now, we don't think we can get enough capital appreciation.
Well, that's what was interesting actually about the MasterCard.
So therefore, we're going to either keep you or lure you, we have to hike our dividend.
Yes, and yes. Here's the deal. I had Analytics Insight go out and run some companies, the S&P 500, through its algorithms to find out which ones other companies in the S&P 500 that might be likely to raise their dividend. And among those they found included Viacom, General Dynamics, Corning, interestingly enough, Campbell's Soup, which might fit that sort of dynamic because it's got so many issues, and Scripps Networks Interactive. They all have the strong balance sheets to do it. And among the blue chips, those that would do it if they became low in price, they felt it would be Coca-Cola and 3M. Not that they would do it for any other reason, that perhaps their peers were better value than they were.
Alison, do you have any thoughts on that?
My sense is that while you had mentioned that people might view it as these companies showing slower growth, my sense is you can still pay out a decent amount, particularly after several years of companies really building up strong balance sheets, and still have healthy opportunities for growth. One of the things that's always concerned me about companies accumulating a lot of cash is there's reinvestment risk, which is allocating the dollars to the wrong area, or merger risk, which is companies going out there and making acquisitions, and fewer than half the mergers that happen are successful. So I kind of worry always about itchy fingers if there's too much cash, and think having a high dividend, even if you're a company in a good growth mode, gives you discipline to allocate resources and only make acquisitions when it's essential for enhancing the franchise.
Okay, Alison, thank you so much for joining us today.